Robert, in your report this week, you say economic indicators are generally positive. So what did we find out about prices?
Yes, Susan, we got both the consumer price index for July and the producer price index for July, and both of them were mild to unchanged. The consumer price index just came up a little bit, a couple of tenths. It has been fairly sedate the last few months, really from February on this year. And the producer price index was unchanged for July. It has also been relatively sedate the last few months. And what that tells me is that these strong year-over-year gains from 12 months ago, and we're seeing them both up, in a range of the high 2s to 3%, we're probably peaking in those year-over-year rates of change. And so that's been a big part of the inflation story, that 12-month change. And so with fairly recent, with sedate data recently, those year-over-year numbers will level out and start to come down this fall. And so that takes a little bit of heat off the Fed, and it reinforces my view that the Fed's going to have a rethink in terms of the pacing on interest rate hikes when we get into next year. I think we're still on track for 2 more this year, 1 in September and 1 in December. But right now, 2019 is looking like a different story.
Okay, Robert, let's move on to labor. We saw initial claims for unemployment insurance fall again. Can they continue to fall?
They can, but boy, are they ever low. These are multi-decade numbers in terms of the lows, going back to the 70s and even to the late 60s. And consistent with very strong labor market conditions, we saw the unemployment rate fall back down below 4% to 3.9 in July. Could go, let's pick a number, say 3.6, 3.7. So we could still go lower on the unemployment rate. And at these levels, I think it is fair to say just about anybody who really wants a job is going to get a job. And so we've done a very good job of reabsorbing a lot of disenfranchised labor from the Great Recession, and that's a good thing. Wages, coming up, not quite as much as we thought, but strong job growth with wage growth means very good conditions for consumer spending.
And what about the survey information that came out about the job opening and labor turnover survey? What did we learn from that?
Yeah, now those are consistent with the initial claims numbers. We call that the JOLTS data, Job Opening and Labor Turnover Survey. That tracks the hiring rate and the firing rate and the quits rate. Hiring rate is just below the all-time high from 2 months ago, so those are very good numbers. Sort of counterintuitively, the quits rate is also high, and that's the number of employees that quit per 100. And as that elevates, that's actually a positive economic indicator because it tells us that employees have confidence that they can get another job. So that's indicative of good labor market indicators, that high quits rate.
Robert, we also learned something about wholesale inventories for June. What can you tell us about that?
Yes, Susan. Now, in one sense, those inventory numbers are backwards looking because they were for June, which has implications for the second quarter GDP numbers, but they reaffirm the sense that that inventories have been very low, a low build over the last couple of months, lower than expected, which means they could be higher than expected. We could be get a bounce from inventories in the current third quarter. So it has some intriguing implications for third quarter GDP. Now, we have a pretty conservative third quarter GDP estimate, just below 3% growth in the high 2s, 2.9, 2.8. I've seen estimates as high as over 4%, one from the Atlanta Fed. So a lot of that range is going to be explained by if we have an inventory bounce or if we don't. And so those inventory numbers are really are taking a prominent position now in our economic analysis. And unfortunately, it's not an area where you get a lot of good real-time data. And so a lot of it's backward looking, but it does suggest that there's a wide band of possible outcomes for third quarter GDP, and we'll have to stay tuned and track the data as it comes in.